Hello and welcome back to the channel. I'm going to be going over my simple dividend portfolio today. It's the weekly update, but I thought I'd show you how all four are doing just before I dive into it. So my simple growth portfolio is at 1.43%. My diversified growth portfolio is at 5.53%. Simple dividend portfolio is at 1.33%. And my diversified dividend portfolio is at 0.51%. I've just done a separate video on the diversified growth portfolio. Now this has only been running like 3 weeks or something, so it's doing quite well. But this video is about the dividend, so let's have a look at this. Okay, so we have a cost of 0.38%, a dividend yield of 3.37%. I'm putting £50 a month in, but I do top up now and then. And it's sitting at 1.33%. And I opened it on 3rd of July. So it's only been running a few weeks, so it's quite new. So I'll just go down and show you how they're all doing. So I've got gold, and you might wonder why I've got gold in here. But, no, I'll show you actually. Easy to show you than explain it. It's not strictly a dividend, but 31.06% in the year. And if you look at the average over the years, so since 2016 you've got 242%. So that's over 20% a year, which I think is really good. So even though it's not a dividend, you could say take 10% as a dividend. You know, I'm talking about when you retire, not now. So that's why it's in there. So it's a good return. Right, next one. UK's at 0.03%. UK quality dividends, that equal weighted, that says there, that's at 0.98%. Euro stocks high dividend, low volatility is at minus 0.81%. We have emerging markets dividend aristocrats at 2.49%. S&P 500 high dividend, low volatility is 0.46%. I'm talking about low volatility because I mentioned I have a growth portfolio and this is more dividend focused. With the dividend ETFs, you'll find when the market goes down, these don't go down as much. But they also, you think, oh, you might be missing out on the growth. But this VHYL one, for example, it does an average of 12% a year, which is exactly the same as S&P 500. So, yeah. So, right, VHYL's at 1.01%. I'll show you that one as I'm talking about it. So dividend is 1.88%. Not a huge dividend, but the return is good. So it's not just about the dividends, you want the bit of growth with it as well. So since January 2016, you've got 118%. So it's very similar to the S&P 500. Right, let's look at the next one. This one is similar to that one. So global quality dividend growth is at 0.16. And both of these, the dividends, they grow each year. So that's good. So what that means is each year, so just say you got £1 one year, next year you might get £1.10, for example. So, you know, it just keeps going up, so it's good. On the dividend side, that is right. Listed private equity, this one's quite good. So we've got a dividend yield of 2.73 semi-annually, so twice a year. The yearly return so far is 14.54%. And if you look over the max, again, if you take the 225% divided by the years, that's January 2016, that's over 20% a year. So even though the dividend is not massive at 2.73, you've still got good growth to go with that. So that's why that one's in there. Right, S&P Global Dividend Aristocrats. Right, from here downwards, these are some new ones I've added. So there isn't any movement on the percentages, but I'll go through them. So this one is a 5.23% dividend yield paid quarterly, and it's 8.42% for the year. Got Pan Asia Dividend Aristocrats, a 4.91 dividend yield semi-annually. So again, twice a year, return of 14.15%. North America, 0.78% paid quarterly. Now this one I added, you can see it's on 11.58 for the year, but I added this one because even though the dividend's not massive, if you look at the overall price return, 169% since 2017, that's over 16% a year, so that's why that one's in there. Right, emerging markets, 6.07% dividend yield paid quarterly. And that's 34% since March 2020. And for the year it's 9.57. It's a good dividend yield on that one. Right, let's do a couple of these at the bottom. So these ones I've added because a lot of the other dividends, they're quarterly or half yearly. Well, I thought when it comes down to retirement, it'd be nice to have some monthly income as well. So this one's at 4.83. There won't be as much growth in these, as you can see, 4.66. So that's that one, but it'd be nice to have some monthly income as well. Try not to go down the bond route. And we've got one here as well. So this one's 4.83 monthly. So that's how it's doing. Like I say, it's not been running long, and I'll do weekly updates on it. So what I'm hoping for is a minimum of 10 to 12% on the growth side. Dividend yield was 3.37, but I've shown you a couple like the gold, for example, and the private equity where they do 20%. So I'm hoping for a baseline of 10 to 12 and plus. Obviously the markets do go up and down though, so but this is what I'm hoping for, but it's more dividend focused. And what I'm hoping to do is invest over the years. I do £50 a month, but I do top it up. I'll show you down the bottom. This is where I've done my top ups. So yeah, this month I've put 3 in for July, and I must have put one in earlier as well because I've got 202. Now this is in my ISA account, but I do also hold it in my SIP account. Now if it's in your SIP account, if you put £100 in, the government will top that up with a rebate of £25. So that's a 25% return every time you put £100 in on your SIP. So let's just say we get 10% returns on the ETFs and your 3.37 dividend yield, plus you get your 25% from the government on the top up, which is really good. But the reason I have it in both is on the ISA side, I'm not going to pay any tax on this. So when it comes down to retirement, all I need to do, you see my dividends are getting, and cash is getting reinvested, it's on at the moment. When it comes to retirement, all I need to do is turn that off, and then the money I can move into my cash account and just take it out. So that's the plan for why it's in the ISA side. I've also got it in my SIP to leave it in there longer to get the £25 top up on the £100. But as with SIPs, you can only take 25% out a lump sum tax free, and the rest you'll pay like normal income, like a job. So the £25 is great, and I do take advantage of that. But I also want it in my invest account, my ISA account. Sorry, and with the ISA account as well. Doesn't matter when you take it out. You don't have to wait till a retirement age to take that out. So it's a lot more flexible as well. So that's why I have it in both anyway. So yeah, there's the overview. Please like and subscribe. And like I say, if you want to go see my growth portfolio update, which I've just done a video on today as well, I think that's sitting at about 5 point something percent. And it was opened about the same time, so you can tell how well the growth one is doing. But that doesn't have as much dividends in, which is why I've done separate ones, the dividend one and the growth one. So if you want to go and have a look at them, I've got playlists, and just pop over to the channel and have a look. Thank you.